Welcome back to Sustainable Views, the podcast looking at sustainability policy and regulation in depth. My name is Philippa Nuttall and I'm editor of Sustainable Views. And with me today I have Deputy Editor Elizabeth Meager. Hi Lizzie.
Hello.
And joining us on the podcast for the very first time is our newest senior reporter, Fiona McNally. Welcome Fiona, and it's great to have you with us today.
Thank you, great to be here.
So last week there was a rather big upset at BP's annual meeting when the fossil fuel giant, in the words of one expert, received an eye-watering whack when more than 50% of shareholders voted against its move to revoke climate disclosure obligations and its proposal that would allow virtual AGMs. The results received a fair amount of coverage, but there are also plenty of other shareholder meetings and voting going on at the moment. And so we wanted to dive into the subject a little bit more and see just what is happening around climate resolutions and whether any trends are emerging. So to kick us off, Fiona, can you tell us what happened at BP's meeting last week and why the vote garnered quite so much attention?
Yeah, definitely. I think it was quite a dramatic AGM, it's fair to say. Someone described it as a kind of triple climate rebellion. I feel like there's various layers to this story that we can unpack a bit. We should probably also flag the headlines this week about BP profits, which have more than doubled following the soaring oil prices triggered by the war in Iran. But yeah, the AGM last week, there were various kind of complexities at play, various issues raised. Several things to note. Obviously, the two proposals you flagged, Philippa, which were resoundingly rejected by shareholders. There was also the issue of a climate shareholder proposal filed by the Dutch investor group Follow This and 16 institutional investors, which was blocked by BP and caused quite a lot of outrage, I think. It was seen as a very aggressive move from a lot of shareholders. Finally, there was a separate climate resolution filed by the Australian Centre for Corporate Responsibility alongside 6 pension funds. They were asking BP to disclose on capital discipline on oil and gas investments. That proposal did get voted on and it received more than 25% support from shareholders, which is pretty high, I think. I think that ACCR resolution asking for those disclosures, it's sent quite an interesting signal. Shareholder resolutions at UK AGMs, they're pretty few and far between anyway, and there aren't many climate-related shareholder resolutions that get through and get filed. So yeah, bit of a statement. But as I was saying, as much as I do think this was kind of a climate story, it was definitely also a governance story, and I think that was what was at the forefront of what was going on at BP and why there was kind of so much noise around it. Shareholders, were really concerned about some governance issues going on at BP, and I think that's where the high levels of support came from. One person I spoke to said to me, you could kind of take climate out of the equation actually, and the results would have probably been quite similar because on the whole, BP would kind of looking to reduce shareholder rights, and that would always trigger a large shareholder rebellion. And we did see lots of managers, asset managers, pension funds pre-declaring a vote against BP chair Albert Manifold, notably a top 10 shareholder, UK asset manager, Legal & General Investment Management. And they all cited very similar governance concerns, which I think really helped put a spotlight on BP, and it did send a signal to the board. Manifold did receive quite heavy opposition. 18% of shareholders voted against him. Several people I've spoken to have told me that this is pretty extraordinary for a few reasons. Firstly, because shareholders will usually give a new chair a bit of a grace period, let them settle into the company and allow at least a year or something before they vote against. And secondly, because some investors will actually have policies against voting against a new chair, so they wouldn't have been able to do so. So it kind of puts that 18%, I think, in perspective a little bit. One thing we should also note is that this is the second year in a row that a BP chair has faced quite heavy opposition. Last year, the board was under really heavy scrutiny for its U-turn on its climate strategy, and nearly a quarter of shareholders voted against outgoing chair Helge Lund. But yeah, I think the overall message from this year was lots of people were describing it as a test for shareholder rights. They saw it as a bit of a moment of reckoning, I think, because, as I said, many investors felt that BP was pushing several boundaries. And yeah, I think there are concerns that that might lead to a trend.
Thanks, Fiona. So, yeah, I think that's really well explained. And you mentioned in your opening words that obviously at the same time, BP profits have more than doubled. We've seen this week, there's been a lot of strong reaction to that. Various climate campaigners in particular have said, this is obscene. especially given, the energy crisis and households and businesses paying more for their bills. Do you see that the shareholder resolution vote has any kind of real sort of lasting impact, or in such a context whereby the company is obviously at the same time making massive amounts of money? Or, as you sort of suggested, is it more noise that perhaps in the longer term might have a bit of an impact, but at the moment is a bit of a moot point?
It's an interesting question. Yeah, I think there are various things at play. I think a lot of shareholders, especially those that were kind of pre-declaring, making a bit of noise about BP, they were obviously very aware of what was going on in terms of profits around the war. One person I spoke to was kind of saying, this is what happens with kind of oil and gas companies. They perform in times of extreme disaster, let's say, such as a war. So I think some companies might look at what happened at BP and see it as a kind of lesson not to push the boundaries of shareholder rights, because shareholders will speak up about this, and there will be consequences. It's quite embarrassing, I think, what's happened for BP. Obviously, they are performing very well, but it's not a good look for any company. But on the other hand, since BP did kind of successfully block the Follow This resolution that I mentioned earlier, I think the risk is, or the fear maybe from shareholders, is that companies may also look at that as an example of how they can test the boundaries of shareholder rights and push. So yeah, a couple of things at play.
Interesting. Yeah, no, I think that's a great overview and definitely something to watch. And obviously, BP isn't the only sort of company facing climate votes. Could you give a little bit more colour in terms of, for the rest of this AGM season, what should we be looking out for and what might happen?
Yeah, absolutely. We've still got a couple of big climate votes coming up at AGMs across Europe, notably Shell and Equinor's, so the same Dutch investor group Follow This. They have successfully filed the same resolution, which BP blocked. So it will be interesting to see the kind of results on those when it comes to voting. Just to flag, the resolution is asking the oil majors to set out their strategies for maintaining shareholder value if oil and gas demand declines. Obviously, as we've mentioned, oil and gas demand declining is, it's not a great moment to be filing, I guess, this type of resolution. But I think, from a longer term pension fund asset owner perspective, these are very valid, concerns. The other thing I wanted to touch on was, say, on climate votes, which had like a little bit of a moment a few years ago, but have kind of dissipated a little bit. Say, on climate votes are where shareholders can vote on a company's climate strategy. And as I said, yeah, they've kind of been declining. So I wanted to use Total Energy. They have their AGM coming up in May. They had an annual vote on their climate transition strategy from 2021 to 2024. There was no vote last year, and they also haven't announced one for this year. I had a look at their notice, their meeting notice. They've just put an item on the agenda to update shareholders on the implementation of their energy transition plan and how that's all going. So yeah, interesting to kind of see that trend, I guess. It will be interesting to see whether we do see a bounce back in climate resolutions. At the moment, they're definitely on the decline.
Super. No, that's really interesting. We should also perhaps mention that as we're recording this podcast, the Transitioning Away from Fossil Fuels conference has just closed in Santa Marta, where there were over 50 countries agreeing sort of slowly to potentially move towards phasing out fossil fuels. But I think it's the first time we're really seeing that there is at least a group of countries which are quite serious. We've seen France this week has come out with its plan to transition away from fossil fuels. There are no new measures in there, but it does group everything together and sort of set out a way forward, even if France itself is not actually sort of on the right trajectory for emissions. So there are these kind of parallel tracks perhaps going on at the moment. And so even though fossil fuel companies are in the headlines, as you say, there are sort of signs of movement elsewhere as well. So definitely, yes, something to keep an eye on. Lizzie, so Fiona tends to be largely focused on Europe, and Lizzie, you on the US, and obviously where things tend to be a little bit more difficult. And the US administration definitely wasn't signing up to transition away from fossil fuels this week. And you wrote a few pieces for us last year where you focused on what the US Securities and Exchange Commission was doing and how it appeared to be abandoning its long-standing tradition of protecting investors and tipping the power balance back towards companies. I think your piece also referenced a decision by the SEC to allow ExxonMobil to build an in-house voting platform for retail shareholders, which would see these investors voting with management by default. Can you tell us, since you wrote this piece, I think it was last September, what you found then and what kind of is happening now?
Yeah, absolutely. So there's been kind of various moves from the SEC under Trump 2.0. The first one being the refusal to defend the climate disclosure rule in court. They have also, Chair Paul Atkins has proposed various changes to disclosures, particularly risk factors. I use this quote all the time, but he described the risk factor section as a Frankenstein monster, which, it's a great quote. And, so I was speaking to a couple of investors yesterday and they were saying, maybe there is an element of truth in that. But their concern is that, you can always tweak the system. They don't want to burn it to the ground. And that is a worry. So Exxon was an extreme example, as it always is, particularly in relation to how it kind of treats its shareholders. But the key to that kind of news was that the SEC had essentially approved this in-house retail voting platform. And when I was in New York for Climate Week, I was speaking to a couple of people who said that lawyers had inquiries from companies looking to do the same thing. They really liked the look of it. I've not heard of any real examples of that actually happening, but companies definitely interested. But the more recent change from the SEC that's much more significant for this proxy season is typically how the process works with shareholder resolutions in the US. So an investor would file it. The company, if they thought it wasn't valid or they didn't want to hear it at the AGM, they would submit to the SEC for a no action letter. And so the SEC has said this year they will not be responding to those no action requests. So essentially kind of handing the power over to companies to decide what's valid rather than the regulator being the arbiter of that.
Yeah, so things are a bit different as always over in the US. And are we seeing shareholders actively have less influence on companies? I mean, you've kind of suggested in your last remarks that is the case. Is that correct?
Yeah. So, I mean, the US is, I think, maybe slightly slower on the AGM season. So I think we're around halfway through. So a lot of big AGMs haven't actually happened yet. So difficult to know. And people I was speaking to yesterday as well were saying it's going to be quite difficult to assess the result of making it harder to file proposals because we can never know what proposals might have been filed. But it is looking like around 20% fewer proposals were filed this year versus last year. So initial kind of estimate. And we have seen a couple of examples of companies throwing out human rights related resolutions, particularly around employment law and immigration is a kind of initial takeaway from this season. In terms of actually voting, so the big US asset managers, even kind of at the peak of ESG, I suppose. A lot of them did tend to vote with management anyway. But someone was saying to me yesterday, if they were already tending to vote with management, they will definitely be voting with management now because they have essentially been kind of bullied into that. So it is definitely still early days to say about the US, but it is definitely looking like quite a different proxy season.
Excellent. Yeah, and you're good there that you've picked out human rights as well. We often sort of focus on the climate side of it or the governance, but yeah, there's obviously also the human rights issue there, which is super pertinent, obviously, in the US at the moment. And Fiona, do you see any sense of sort of what's happening in the US bleeding into Europe or the UK or not at all?
I think it's one to watch. There's a couple of things to look at. I think I spoke to a kind of corporate governance expert who was saying there's kind of no expectations for any changes to the UK or European kind of corporate governance codes and practices anytime soon. They're not going to do something extreme like we've seen over in the US. Some people who I spoke to about the BP AGM kind of said you can't fail to see a little bit of a connection between what happened at Exxon a couple of years ago and BP. One person I spoke to said, it's not the first time we've seen an oil major use what is perceived as kind of extreme tactics to defend themselves against shareholder activism. And the Exxon case has another parallel with BP because of the follow this aspect as well. So yeah, it's a little bit eerie, I guess. But yes, this expert I was speaking to was kind of saying it's reasonable to ask the question of whether some of the practices that started out in the US are heading across the Atlantic, but it's too early to say at the moment. But it's worth flagging that shareholders are worried about that, I think, and you could see that from the reaction of at BP.
Yeah, indeed, it's something definitely to watch. And Lizzie, back to you before we finish. Are there sort of wider concerns about what's happening with SEC and in companies means sort of for corporate governance more widely, and even for democracy? I mean, there's obviously lots of analysis of how far the US under Trump is moving towards a fascist state or not, or which we don't need to go into. But yeah, is this a case
point?
one small sign or even a big sign of kind of a slight rolling back of democracy and corporate governance?
Yeah, I think that that's the worry. We talk about investors and we talk about institutional investors, but ultimately institutional asset managers, their clients are pension funds. Pension funds kind of end clients are individuals, and taking power away from them in the favor of corporations is a worry. It is there is a connection there to democracy. One other thing that has kind of come out of this proxy season is that where companies have thrown votes out, there have been litigation as a result of that. At least 6 cases so far where the investor who's had their resolution thrown out has sued. One person I spoke to yesterday raised a concern about that because there are only certain types of investors that have the resources to take legal action against these companies. And so it's another kind of, as we've seen throughout this administration already so far, another way of just kind of prioritizing those that have the resources. There's been so much litigation since Trump returned to the White House, but not everyone has the power, the money, the resources to bring that litigation. And so it's a further kind of weakening of the individual investor.
Concerning, yeah, definitely something we'll be covering more on Sustainable Views. And Fiona, from an EU or European point of view, do you see things slightly differently? Perhaps even BP and the vote there is actually a sign that there is still this kind of corporate accountability, and we need to be less worried.
Yes, absolutely. It's a really good example of shareholders rallying together and making a really clear statement to the board regarding shareholder rights. And, it's a warning, I think, to other companies as well. Like I said, there are two sides of this, though. It is a worrying signal. And I think this might not be the last example we see of a company trying to kind of test shareholder rights. So again, one to watch for maybe, the rest of this AGM season, definitely for next year as well.
Excellent. Well, thanks to both of you. I think watch this space is the message. This is definitely not something that's going to go away. And thanks to our listeners for tuning in. If you want to listen to more podcasts or to read our journalism, go to sustainableviews.com.